But I tell you, if you've made a ton of money and you take it off at the high and you nail it, you will not put the same amount back in at the low, down 85%. When everybody's calling you a criminal, they're going to shoot everybody involved in crypto. There's going to be the gulags for crypto investors. You're like, I'm not doing it. And you will end up screwing the whole thing up. The other one I was talking to Chris Boniski about is people are really getting concerned about, where does the top come? Is it early? Is it normal? Every time it's always been December.
A notable macro analyst and critic, Raoul Pal, is unique in digital assets. Pal challenges worldwide economic pessimism with a refreshingly upbeat outlook on the macroeconomic condition. Sound money advocates have often warned about the swift devolve value of fiat currencies, anticipating a financial disaster that would destroy the global economy. Buddy claims more debt only viable way to stimulate the global economy, unlike many sound money solutions. Proponents of an impending global collapse, Buddy believes the US and global economy have a sustainable road forward in a recent macro and crypto talk with Blockworks Macro. Pal discusses the evolving macroeconomic landscape and the natural progression of the debt-based system into the exponential age, where high-tech innovations are created at dazzling speeds to change and disrupt every aspect of our lives. Pal estimates that by 2030, there will be no reason to worry about debt or GDP as AI and robotics. Well, we're sharing highlights from Raoul Pal's recent interview, in which the macro guru offers a fresh take on the long-term macro picture. Please watch, share, like, and subscribe to the channel. Turn on post alerts and comment on Pal's video. Thanks and enjoy.
It differently in a way that I've started trying to communicate with people to understand this. And this is very pertinent to you. If we're trying to take the 30-year-old as the demographic, the 30s to 35, and it's global, right? So what we've got here is a global utility, which is blockchain, much like the internet was. Now, unlike any of these global utility networks, trains, road systems, all of this, you couldn't invest in them. But because this is tokenized, you've got a behavioral incentive system to grow the network, which is the more people come onto the network, the more the number go up, the more people come on the network. And therefore, the more capital in the network, the more applications get built, the more the network gets used, right? It's fucking genius. And we've never seen anything like this, where we're all part of it. So here we've got this asset class, which is a globally homogenous asset, which doesn't exist. Gold is the only one, but gold, if you go to a village in India, the bid-offer spread is 50%. Here we've got tradable on a mobile phone in India, the Philippines, Fiji, New York, Vancouver, the Cayman Islands, the same thing. And it happens to be the infrastructure layer to the internet for the system, for value and storage, and it's that distributed database, which is a public service utility good. Okay, brilliant. It's a $2.5 trillion market cap today. If we just extrapolate out the trend rate of growth, it gets to $100 trillion by about 2032. Okay, so this is the biggest wealth generating opportunity in all human history. So you've got this in front of you, which is this whole how to unfuck my future. Part of it is this. The other thing is, don't fuck this up. Never get thrown off this horse, because this is the one. This is the big one. This is the greatest macro gift of all time to get everybody out of this shit that they're in. So it's there in front of you. So then people are like, yeah, but what do I invest in? I'm like, okay, listen, detune all the noise. There's a bunch of decentralized businesses that sell block space. And they all have different types of block space. One's going, hey, mine's the most secure and the oldest. Somebody else is like, well, mine's the internet computer. And somebody's like, mine's the internet computer, but faster. They're just selling block space. So there's a bunch of companies selling block space or applications on top of that block space. That's all the space is. It's just a technology and it's an adoption. So our job within this is now not get philosophical and tribal about where do I invest in that technology and screw it up. Our job is to maximize the opportunity to the best we can. And that's a balance of how do you take risk? Because a lot of people go, max 10 risk. Like, no.
Yeah.
Look, if it's going for 2.5 trillion to 100 trillion, you don't need to take max risk. You can just capture the bulk and then do a bit of the tail on the side. I try and communicate it, but people don't want to hear it, is the point, right? This is a narrative-driven attention space. And so they just want what they can do. I made it very clear all the way through, hey, 90% of my liquid net worth is basically allocated right now to Solana. I moved some from ETH. I don't have much Bitcoin right now. Doesn't mean I don't like Bitcoin. I just think the others go up more. Simple as that. I own a bunch of high-end NFTs that I think I have another thesis about. And then beyond that, I do a bit of speculation and other stuff for the fun of it. But the time horizon thing is, I can see it freaks everybody out. And I've stepped back, and it was only in the last 2 weeks I've realized the risk, the real thing that's going on crypto Twitter, and why the banana zone resonates and why you get this backlash is this is everybody's hopes and dreams. It's everybody. It's yours, it's mine, it's everybody's. Right, so they're so scared of it going wrong, yet they're so greedy to get it right. This is the struggle that everybody's having.
AI, AGI, robotics, and other new technologies will do for the world economy what the huge baby boomer group did after WWII in the next few years. The CEO and creator of Real Vision says that the process is well underway and should be finished by 2030. So long as that doesn't happen, Powell thinks that central banks will have to keep printing money, taking on more debt, and weakening their own currencies even more in order to make the value of assets look worse. We know that central banks will keep printing and debasing fiat currencies, which means that asset prices will keep going up. This is why Powell calls the current situation the best macro chance in history. It's important to know that this debasement has only been stopped by crypto and tech. Crypto is the much better investment. It doesn't matter about debt, debasement, bull and bear markets, according to Powell. All investors need to do is put their money into the one asset class that beats the rate of debasement and wait for the boom that will happen from about $2 trillion today to $100 trillion by 2030. Powell talks more about macro and the banana zone in the chat.
Mm-hmm. And people have PTSD from the last cycle, as the people did from the previous cycle. Right? The previous cycle was the blow off top and then the collapse. This one was the stunted top and then the collapse. And so now people, they worry about the cycle. Mm-hmm. I don't remember Jeff Bezos caring about the business cycle. He just owned his stock. If you're in a secular bull market, there is demand for the good that you produce, in this case, block space, premium block space, then why the fuck are you trading it? What you should do is buy all the sell-offs. If it goes down 85%, you're like, hell yes. It took me a long time to realize that, because I too was the macro kind of cyclical guy. And I think, well, let's sell it at the top. So I think I can predict somewhat the tops from the everything code cycle and the usual bunch of stuff. But does it really matter? As a 30-year-old, yeah, okay, you might want a house. So there's lifestyle chips. Okay, fine. But I tell you, if you've made a ton of money and you take it off at the high and you nail it, you will not put the same amount back in at the low down 85%. When everybody's calling you a criminal, they're going to shoot everybody involved in crypto. There's going to be the gulags for crypto investors. You're like, I'm not doing it. And you will end up screwing the whole thing up. The other one I was talking to Chris Boniski about is people are really getting concerned about, where does the top come? Is it early? Is it normal? Is it, every time it's always been December, but for some reason everyone's freaked out it's going to be a different time now. Okay, fine. And that's because of PTSD. But it's not that. I don't know. We don't know. None of us know. Is it going to be a bubble top? Is it going to be, it doesn't matter. What is the one that scares me is what happens if the correction in 2026, because we don't have 22, we don't have it, beating out of massive inflation and the pandemic stuff. Imagine if we just only went down 40% in Bitcoin and 20% in NASDAQ. This is kind of my favorite probability. Sure, there's a whole bunch of alts that are going to go down 99%. I'm just talking about Bitcoin. Everybody's going to miss the trade because they're waiting for the down 70.
Yeah. Do you think ETFs play a big part in that suppression of vol, or at least like providing a floor to it?
Yeah, I think so. I think younger people in the US can use their 401ks and dollar cost average on a 2 weekly basis, and they do that a lot. So I think that helps. It's not fully in swing yet. I also think that the ability options probably out by then. That probably dampens volatility, and just maturity and understanding of what the network is. That next time around it won't be. It's all a scam. It'll be the business cycle liquidity. Much like it I mean, I can't see a big crash in the NASDAQ, not with this unbelievable kind of mega trend of AI, compute, EV, robotics, all of that stuff. So a lot of them, if you go back to all of these business cycles since 2008, most of them have had stuff like the NASDAQ trading down 20%, down 25% for a year. It's boring. And I think that feels like, because the super narrative of all these technologies coming together is so big, and the capital, that it feels like that the biggest risk is it doesn't go down a lot.
There are many strong examples that support Raoul Pal's claim that increasing productivity and economic growth can help manage the debt load, allowing for ongoing periodic money printing. One example that macro analysts like Pal and Lynn Alden often use is the effect of globalization efforts in the early 1980s, when the U.S. national debt became a major topic of public discourse. The national debt reached $1 trillion for the first time on October 22, 1981, a number that, unlike today, caused a lot of public concern. The subsequent push toward globalization was marked by technological advances that streamlined international trade was very important in solving this debt problem. The International Monetary Fund says that a lot changed in the 1980s and 1990s, which are often called the decades of globalization. The word globalization became more common in the 1980s, around the same time that China adopted the open door policy, which let foreign businesses into the country. These events helped the U.S. put off paying its debt for another 40 years. A friend says that if the AI revolution goes as planned, it could lead to another 40 or 50 years of progress and maybe even stop the economic crash that many people are afraid of. What do you think of the ideas presented in this video? Do you think that AI and other technologies that are changing quickly can help solve the world's big debt problems? Leave your thoughts, comments, and observations in the part below. Don't forget to like this video, subscribe to the channel, and turn on post notifications to get more videos like this. Thanks for watching.